If you are that type of trader that always move your stop loss to break even immediately the trade start going in your direction, then this video is for you. In short, watch this video till the end to grab the full concept, right? So I observed that most losses that occur in the market is not because the trader's analysis is wrong. It is not because the trader doesn't know daily bias. It is not because the trader doesn't have a full picture of what his strategy or her strategy is. Now, the problem is some of the attitude you show towards managing your trade can endanger your trade to be in a losing trade, even though the market is going in your direction. So in this video, I'm going to show you exactly what usually happens in the market and how that the market doesn't move straightforward. The market always make expansion, retracement. That is how the market moves. There won't be a point where the market is only expanding without retracing. No matter how long it takes the market to expand, it will take another retracement for that market to expand again. So that is what usually play out at a trade entry, or when your strategy or when your signal usually show up in the market and you end up entering the trade. You shouldn't move your stop loss too early. You should have a very concise and definite strategy of moving stop loss to break even or moving stop loss into profit. After watching this video, you'll be able to move your stop loss appropriately without endangering your trade. So in this trade, we can see in this example, the market was going bearish, and then we finally have a shift of market structure to the upside, right? What happened is the market retraces into maybe your institutional reference point in form of fair value gap, order block, or whatever you're looking at as your confirmation for trade entry. And you enter this trade here. Enter this trade here. Immediately the trade start going in your direction and break this structure. Then you now say, oh, the market has broken a structure. Now let me move my stop loss to break even. And you now end up moving your stop loss to break even. What will happen next is that the market will come down as if it is retracing and take out your stop loss at break even and retrace into this extreme order block, to retrace into an extreme order block here, and before it will expand immediately and start going in your direction. You'll be like, the trade has been liquidated and it is going in my direction. Frustration and regret. So what you should do is to ensure that market has finished grabbing orders at your entry point or grabbing liquidity before you consider moving your stop loss to break even, or before you move it slightly into profit to mitigate the effect of spread and commission, right? So at this point, you are not supposed to move your stop loss to break even. You should allow the stop loss to be at the initial point, right? Allow this trade to finish making it liquidity grab. Then at this point, you can confidently and safely move your stop loss to break even. Now, what usually happens at trade entry is that the entry can be retested 2-3 times before the trade finally moves in your direction. Also, this should be considered in you moving your stop loss to break even, right? So let's say we have this, the price retested this point and move into profit again and move into profit again. Now at this point, you have one break of structure here, number one, right? And then you have the second break of structure here at this point, right? Even if your first entry point is not retested, you can move your stop loss to break even at this point. You already have one structure, two structure that has been broken. So you have a very new demand zone, right? you have a very new demand zone here that has been created, that even if price is going to test this demand zone and grab liquidity below it, it should be somewhere around here, right? It should grab liquidity below this low and test this extreme demand zone. But then at this point, right, it is safe if your stop loss is here after breaking one, two market structure, creating a new demand zone that is different from your initial entry point. You can move your stop loss to break even. Mind you, if you move your stop loss to this new demand zone, there's tendency that it is not safe here. There's tendency that it is not safe here. So you should move it to entry and allow your trade to trade off to your TP, right? Trade off to your TP. So this is what happened here. Can you see what happened here? Right? We have a shift, we have a low and a shift of market structure. Then price retrace into this fair value gap. Immediately you enter this trade and your stop loss is here. And your stop loss is here, right? The stop loss is here. And we have a shift of a break of structure. There's a break of structure here. If you move your stop loss to break even at this point, what do you think would have happened? The market, after breaking this low, come back and created an intermediate term low and come back to take out liquidity above this two low, coming back to your entry or slightly above your entry point, slightly above your entry point. This is a clear liquidity grab, and then it means that the market is still picking orders at this entry point, or institutions are still picking orders at this entry point. Immediately after grabbing this liquidity above this old high, it means this. Can you see how aggressive? Can you see how aggressive price move from there? This is what usually happens to some traders, and you see them crying and saying that, I've been taken out, and see the trade going in my direction aggressively, right? Moving your stop loss too early was the only sin you committed here. Was the only thing you committed here. If not, you would have been laughing in profit. You would have been laughing in profit. But because you moved your stop loss too early, this is why it happened. This is it in a bullish condition. In a bullish condition, you enter a buy, place a stop loss here, allow this stop loss to be until you finally have a clear market structure break, and then clear uh, indication that price is not coming back to your entry. Then you allow, then you can move your stop loss to break even. There are traders, there are professional traders that doesn't move stop loss to break even. They have this mindset that it is either the trade hit stop loss or hit TP. So they are not modifying their stop loss in any way except the trade hit TP and it will liquidate TP and then the stop loss at the same time. I hope you find this insightful. If you like this video, hit the like button and don't forget to follow me for more content. Have a great trading week, guys.